Okay, I'm going to post the answer to problem 3-35A in Blackboard, and I just want to walk you through the solution. I'm not actually going to do the homework problem, but I'm going to show you the question, show you the answers, and kind of talk about how we arrived at each of these answers. So, in this problem, we have an unadjusted trial balance for Arlington Air Purification System at December 31st, 2014. So this may give us some useful information. But let's scroll down to the requirements. We're going to need to make some adjusting entries. So Part A says that on December 15th, Arlington contracted to perform services for a client receiving $2,600 in advance. Arlington initially recorded this receipt of cash as unearned revenue. So the initial journal entry on December 15th would have been a debit of cash of $2,600 and a credit to unearned revenue. But on December 31st, Arlington has completed $1,100 of the services. So what we will need to do is move $1,100 from the unearned revenue account into the revenue account, the service revenue account. So we're going to do that by debiting unearned revenue for $1,100 and then crediting service revenue from $1,100. You may recall that this unearned revenue account is a liability account because you would owe somebody services if you had unearned revenue. Okay, so we're reducing our unearned revenue account by $1,100, and we're increasing service revenue by $1,100. All right, let's move on to the next question. B says Arlington prepaid 2 months of rent on December 1st. So here's where we go back to our unadjusted trial balance and take a look at it. If we look at our prepaid rent account here, it has $2,400. So it's telling us that this is 2 months of rent, and it's now December 31st. So we've used half of this, or $1,200 rent. So we're going to take $1,200 out of prepaid rent and put it into rent expense. So if we go back to our answer here, we have a debit to rent expense of $1,200 and a credit to prepaid rent of $1,200. And you can scroll down below your adjusting journal entries and it will show you the calculations. $2,400 divided by 2 equals $1,200 rent expense for December. Okay, let's go back to the question. I have to move over to page 192 now. Arlington used $600 in office supplies. So if we look at our unadjusted trial balance, we had $1,300 in office supplies, and we've used $600 of them. So we're going to have to credit office supplies for $600 and debit office supplies expense. And if you move to your answer, that's what we have. We have a $600 debit to supplies expense, and we've credited office supplies for $600. Okay, so if you wanted to know your ending balance in your supplies account, it would be $1,300 minus $600. You would have $700 worth of supplies left. Part D says that depreciation for the equipment is $900. It's a pretty straightforward entry. Whenever we make an adjustment for depreciation expense, it's always going to be a debit to depreciation expense and a credit to accumulated depreciation. Part E says Arlington received a bill for December's online advertising for $900, and they will not pay the bill until January. Okay, so we have an expense, but we're not going to pay it till later. So we need to debit an expense account and credit accounts payable. Okay, and that's to accrue advertising expense. Let's move back up here. Alright, Part F. Arlington pays its employees on Monday for the previous weekly wages. Its employees earn $1,500 for a 5-day work week. And December 31st falls on Wednesday this year. So, let's see, we owe 3 of the 5 days out of the work week. Let's go to our calculation over here. I'm going to scroll down and look at the calculation for Part F. The payroll for the 5-day work week is $1,500. So for each day, our payroll is $300. And we want to record 3 work days. So 300 times 3 tells us that we need to record salary expense for $900. And we're going to debit salaries expense for $900 and credit salaries payable for $900. That's to accrue salary expense. And then on G, it says on October 1st, Arlington agreed to provide a 4-month air system check beginning October 1st for a customer for $3,200. Arlington has completed the system check every month, but payment has not yet been received, and no entries have been made. Okay, so we've actually earned some revenue, so we need to record it. Sorry, I'm going to go back to the question real quickly. So the service contract was for 4 months, but only 3 months have passed, October, November, and December. So we need to record 3 months of the worth of the $3,200. In other words, 3/4 of it. Okay. So if we go back to over here and look at our calculation, the 4 months contract was for $3,200. So that's $800 per month. And we've earned 3 months of it. So 800 times 3 is $2,400 of service revenue that's been earned. So we're going to accrue service revenue by debiting $2,400 to accounts receivable and crediting service revenue $2,400. Okay, so if you want to review these adjusting journal entries, here they are. And then those that needed calculations, the explanation is on the next sheet. On the next requirement, let's go back over here. Use the unadjusted trial balance. Open the T accounts with the unadjusted balances and post the adjusting entries to the T accounts. Okay, so if we go back to our solution, you see that we have these T accounts here. This is what our general ledger would look like. We have our beginning balances that we pulled over from the trial balance, and then we're just posting our adjusting entries that we covered in Part A. And so you can manually check on your own to see that these entries here match up with what you did in the first part. For example, if you go to Part E, you'll see that you made a credit to accounts payable for $900. And then you calculate the balance of your T accounts. And from there, you would be able to construct your adjusted trial balance. Okay. And a company is going to prepare an adjusted trial balance to help them prepare their financial statements. Okay. This is not a financial statement in of itself. It's just a tool that you use to help you prepare other financial statements. So look over this information. If you have any questions, just let me know.